China's supercomputing industry adeptly adapted to U.S. embargoes in 2015 by pivoting to domestically produced components, but its 5G industry failed to do so when faced with similar U.S. sanctions in May 2019. This column argues that while China's supercomputing industrial policies were well designed, with the central government accentuating the acceleration of upgrading the entire industrial chain, its 5G industrial policies, particularly from 2015 to May 2019, misdirected companies and investors, hampered optimal resource distribution, and skewed industrial progression. Immense national economic resources and state intervention may not necessarily translate into industrial advancement and technological superiority. Industrial policies, once scoffed at by mainstream economists, have surged in prominence over the last 15 years, a trend magnified following the 2008 global financial crisis, Roderick 2010, Vogel 2021. Within the recent 5-year context marked by the ongoing U.S.-China trade war and great power high-tech rivalry, Zheng 2018, Zhang and Cheng 2021, Eichengreen 2023, an increasing number of countries have augmented their reliance on industrial policies in a bid to bolster international competitiveness. Significantly, the Chinese central government has ardently promoted two strategic high-tech industries, 5G and supercomputing, with robust industrial policies. Intriguingly, while the supercomputing industry adeptly adapted to U.S. embargoes in 2015 by pivoting to domestically produced components as alternatives to U.S. imports, China's 5G industry failed to do so when faced with similar U.S. sanctions in May 2019. Why could the 5G industry not produce key upstream components, whereas the supercomputing industry could? Centralized governance in China exerts an influential grip over its economic, business, and social activities, Lardy 2019, Lee and O'Brien 2021. Previous scholarship has shown the causal effects of industrial policies on China's domestic industrial development, Lin 2017, Wang et al. 2022. Building upon the existing literature, in my recent paper, Zheng 2023, I address this puzzle with a focus on China's central government-level 5G and supercomputing industrial policies. I also endeavor to provide insights into the driving factors steering these policies. It is imperative to clarify that I do not solely attribute the divergent outcomes to industrial policies. However, devoid of a critical examination of the 5G and supercomputing industrial policies, one remains bereft of a comprehensive understanding of the disparate development trajectories of the aforementioned industries. Further, an in-depth analysis of the Chinese 5G and supercomputing industrial policies can contribute to academic and policy debates on the efficacy of industrial policies, especially how they should be practiced, Roderick 2010, Calypsody et al. 2019. Prior to presenting the discoveries, it is worth noting that both the 5G and supercomputing industries encompass upstream, midstream, and downstream segments. In the Chinese context, upstream refers to the research and development, R&D, and the production of core components such as 5G and supercomputing chips and software. Midstream signifies infrastructure construction like 5G networks, base stations, and supercomputing centers. Downstream points to applications and related services. Notably, the upstream segment is crucial for enabling 5G infrastructure construction and the operation of supercomputers. Title 1, Divergent 5G and Supercomputing Industrial Policies. Using natural language processing, a machine learning technique, and qualitative content analysis based on meticulously collected official documents and secondary sources, I identify salient policy differences. The principal findings are as follows. First, China commenced the promulgation of 5G industrial policies in 2015. Before May 2019, these policies were significantly unbalanced. Within the corpus of 12 official documents from 2015 to May 2019 concerning 5G, words epitomizing midstream and downstream activities, such as commercial application, network, and industrialization, overshadowed their upstream counterparts, indicating that the central government put much less weight on the upstream than the midstream and downstream. While these documents sporadically mention phrases associated with 5G chips and components, signaling a modicum of attention to the upstream segment, a careful review reveals that merely 4 documents, 33.3%, mention developing the upstream, whereas 7, 58.3%, and a staggering 12, 100%, champion midstream and downstream advancements, respectively. Alarmingly, the scant references to 5G chip development were bereft of specificity, leaving a void in strategic prioritization. Consequently, Chinese upstream companies lacked incentives and sufficient resources, thereby either focusing on labor-intensive production or relying on purchasing foreign core components. Second, in stark contrast, supercomputing industrial policies were well designed, with the central government accentuating the acceleration of upgrading the entire industrial chain. The most commonly used words in the policy documents were intellectual property rights, research, technology, independence, infrastructure, and industrialization. These documents also highlighted the development of essential parts, software innovation, and integrated circuits. The 863 program, a national-level industrial policy spanning from 1986 to 2016, played an indispensable role in achieving technological independence in the supercomputing industry. This program birthed an expert responsibility system, ensuring the supercomputing industrial policy advice and design by the experts resonated with the overarching vision of the central government. It also made government-funded public entities instead of private companies the dominant player in the research, development, and deployment of supercomputers. Such an arrangement prevented the problem we have witnessed in the case of 5G development. Public entities' objective was not to reap short-term economic profits, rather, they served Chinese national interests and focused on long-term technological advancement. Third, from 2021 onward, a marked inflection was discernible in the 5G industrial policies, specifying the types of 5G chips China aspired to indigenously produce. Certain policy documents have explicitly demanded comprehensive R&D encompassing not just the chips but also other upstream components. This policy shift had immediate effects, driving more Chinese companies to flock to the upstream and develop their own components with venture capital funding. However, an analytical overview intimates that the overall policy attention devoted to the upstream segment remains much lower, 28.6%, in contrast to the midstream, 64.3%, and downstream, 92.9%. Title 2: Motivations for the Policy Divergence. Drawing from political economics frameworks, I point out that domestically, the allure of swift GDP augmentation stemming from 5G infrastructure investments and downstream applications juxtaposed against the resource-intensive and high-risk nature of upstream research largely influenced policy choices. Internationally, a propitious environment made it easy for China to import key 5G upstream components. Consequently, China's 5G policies between 2015 and May 2019 exhibited an inadvertent sidelining of upstream endeavors. Although policies have started to rebalance since 2021, significant challenges in internal economic transitions, Zheng 2011, Pettis 2021, coupled with exogenous supply shocks, Freeman and Baldwin 2022, rendered infrastructure investment in commercial applications the sole viable conduits for economic growth. In contrast, a confluence of international antagonism, domestic impetus, and Deng Xiaoping's imprimatur shaped the Chinese supercomputing policy landscape and trajectory in its own unique way. On the international front, the lingering animosities of the Cold War era in the 1980s galvanized an unwavering commitment among the Chinese top leaders and strategic scientists to indigenously develop high technologies including supercomputers. At the heart of this domestic confluence was Deng Xiaoping, China's paramount leader of the era, who decisively spearheaded the 863 program that spanned 3 decades and cast a long shadow over China's supercomputing-related industrial policies. Title 3: Lessons Learned. Many scholars accept the claim that industrial policy can successfully promote the development of targeted industries. My analysis, however, shows that China's 5G industrial policies, particularly from 2015 to May 2019, misdirected companies and investors, hampered optimal resource distribution, and skewed industrial progression. This observation further implies that immense national economic resources and state intervention may not necessarily translate into industrial advancement and technological superiority. A salient takeaway centers on the imperative of formulating astute industrial policies. For strategic high-tech industries critical for economic growth and national security, industrial policies should not overlook the development of any segment of the industrial chain. Core components and technologies need to be self-built. Furthermore, the nature of these strategic sectors mandates profound governmental stewardship rather than a sheer dependence on market dynamics. The strategic amalgamation of national resources, leveraging national labs and publicly funded academic institutions for pioneering R&D endeavors, instituting stringent oversight and accountability frameworks, and fostering symbiotic alliances with technically adept enterprises can collectively engender well-balanced industrial evolution. This point finds strong resonance in the trajectory of China's supercomputing industry. Lastly, as countries increasingly recalibrate their industrial policies, the foundational tenets of the liberal international economic order, Roland 2021, are under threat. Industrial policies such as local content requirements and high-tech export restrictions thwart foreign countries' access to domestic markets, impede the unfettered dissemination of knowledge and technology, and engender geoeconomic rivalry.
观众朋友们好，感谢大家来到今天的这个思想先驱报节目现场。节目刚开始可别瞎说怎么20分钟解决任务啊？刚才我们做完节目，我连去洗手间的时间都没有，所以大家知道我们今天这个任务之所以结束，那其实呢不仅仅是节目内容的问题同时呢也是一些具体的现实生活中的一些时间的这样的一些不得不遵循的时间的限制给我们带来的节目时间的压力。在今天的节目中我们继续为大家带来的仍然是跟中国经济有关的相关讨论。在过去的这一周来自《华尔街日报》的一篇文章可以说是引起了外界很多的关注。文章呢出自于魏玲玲女士以及合作者范一新之手。那么这样的一篇文章透露了一个信号，就是现在尽管外界对于中国政府推出更大胆的更激进的刺激措施有很大的这样的一种希望，但是中国的领导人习近平似乎越来越显示了某一种保守的倾向，对于西方国家通过直接发现金或者是增加福利来刺激消费救经济，这样的一种可以说是过去历届西方国家走出经济危机的一个颠之不破的模式，似乎是存在某一种根深蒂固的反对。那我们也知道8月16号在《求是》这一本杂志上曾经发表过习近平内部讲话的全文，其中在谈到中国经济的时候就说习近平指出，中国政府希望避免采取西化刺激政策，而是敦促人们要有耐心那么呢，《华尔街日报》的报道就引述2位了解中国决策情况的人说，之所以在8月16号这一天才发表这一篇习近平在好几个月之前的内部讲话，实际上呢是一种刻意的安排。中国最新公布的一组经济数据显示，经济持续疲软，要向外界传达这样的信息，就是并不是我们的经济不可控了，而是我们有意不为之。这个时候才公开了习近平的全文讲话。这一些政府顾问也向《华尔街日报》透露，中国领导层现在需要回击国内外敦促中国政府采取刺激措施的呼声，尤其是有关于要推出向家庭消费倾斜，而不是其他政府项目的一揽子财政计划。因此，以在《求是》杂志上发表习近平讲话这样的形式来巧妙的回击这一种压力。学习时报后来呢也发表了一篇文章，其中就解释为什么不向消费者发放现金。我记得我们之前在华尔街论坛的节目中也讲过学习时报的这一篇文章，认为这样的一个方法成本太大，在中国不可行。又说，如果是以政府项目为主导的刺激方案，好处是不仅仅是刺激眼下的需求，而且还能够形成增长真正的动力。华尔街日报的这一篇报道引述了解北京决策的人士说习近平之所以对于以消费驱动增长的模式存在根深蒂固的反对，是他认为这样的一种增长模式浪费太大，不利于把中国打造成为技术强国和工业强国，与自己既定的国家发展目标并不吻合。文章还说有的人士也相信 习近平认为中国应该坚持财政纪律，特别是在债务负担相当沉重的情况下，因此各种情况综合来看，似乎是不大可能推出美欧式的福利政策了。那我们也知道啊，过去啊，中国的这个社会保障、社会福利一直是各方讨论的关键。中国的医疗福利还很不健全，失业救济覆盖面也不够完善，整个的 GDP 消费贡献的比例与西方国家相比也有比较大的差距。而分析者表示，现在其实情况已经很清楚了，并不仅仅是中国经济面临的问题需要这样做或者是那样做，习近平本人的意识形态也起到了很大的作用。他不希望建立西方式的福利国家。那习近平为什么对于西方式的福利国家这么的反感呢？有分析说说这可能是与习近平在文化大革命期间的经历有关。认为呢，习近平在文化大革命期间经历了很多艰难困苦，筑窑洞、挖沟渠。因此他始终强调艰苦奋斗是一种美德。那么跨国机构也呢需要中国政府给出一个解释，就是为什么中国不能够直接刺激消费？这不是有利于中国更快地走出现在经济的困境吗？而决策者认为，消费者即使手中有钱，可能也是存起来了，不会花出去，对于经济的刺激效果有限。所以不如直接调配到国有部门，这样才可以可靠地促进经济增长。目前，中国政府对于刺激经济的一系列举措也始终范围比较小，力度不够，而中国的信贷需求仍然较为差，而几次降息对于经济活动的刺激效果似乎也有限。投资者这一次恐怕他们的希望又要落空了。那我想请问一下何明先生华尔街日报的这一篇文章，今天早上呢，我们也引述相关报道，在华尔街网报节目中为大家进行了介绍，其中就透露出了几个相当关键的信息。第一，中国政府是不会采取西方式的以消费刺激经济，导致经济回暖走出现在低迷的方式的。第二呢，就是这样的一种哲学与习近平本人的经历是息息相关的。他走过文革认为到吃苦是最重要的，不希望建立养懒人的福利社会。而第三个问题就是，习近平始终的国家发展目标还是把中国建设成为技术工业强国，因此呢，越是这个出现这样的经济问题，越有可能加重国有经济部门的这样的一个比例，希望能够通过国有经济部门这样的一些关键重点行业的发展，拉动整个经济的长足发展和进步。对于习近平的这种想法，你觉得是不是有道理？还是说在面对现在眼下的经济困境的时候，这一种举措可能是得不偿失的？
有一些说法是也不能说没有道理有一些说法呢也是值得疑惑。习近平的问题就是说，他是不是要建立一个刚性社会？这个刚性社会的特征就是没什么弹性我就要求大家在意识形态是这样，或者是我的体制也是这样。就是过分的这个精确化和刚性呢，恰恰就是法西斯纳粹分子他们一直想做的事情，对吧？就是我要建立一个非常的按照我的存在的意识形态所建立一个国家。那资本主义和自由社会的一个特征就是给社会给这个民间甚至给政治有一种更加的灵活性和弹性。这样的话呢，当这个社会产生危机的时候它有一些缓冲性的作用。习近平的这种刚性思想是不是他的主导是文革的时候造成的，意识形态造成的，我们还要仔细去观察。但是从现实政策来讲，我不认为习近平的这些政策又错到哪个地方去。为什么呢？第一个就是如果经济真的是出现停滞了，不前进了比如说你像美国疫情期间从餐馆到运输系统到各个系统基本上处于一种停滞状况。在这种情况之下，如果你没有这个现金的刺激，老百姓手里本来就没有钱那么这个跟中国习惯不一样，那你经济就激活不了。当经济激活不了，你这个产业链供应链就会停滞下来。等到你开放疫情的时候，你可能就像我们之前李奇博士也讲过，你真的重新把开关打开，也并不意味着经济马上就激活了。 它就让这个经济保持一定的供应链的这种活跃的程度。那是在美国经济处于非常危机的时段，我觉得美国发这个现金也是对的。但是发现金造成的灾难和问题黑洞其实是非常之多的，但是美国这个国家它有很大的承受能力，中国就未必有这个承受能力。你比如说美国人如果发1万块钱，对吧？对于今天的消费者来讲，1000块钱没什么用，1万块钱发起来，你说全国有多少个亿？另外就是中国老百姓和美国老百姓不同，就是说美国老百姓没钱就真的没钱。中国的老百姓吧，我不能说很富有但是你可以说是手里的这个存款是相当多的，这些数字里面都反映了这一点。如果你给他这个钱，那么他又不花，那你这目的达不到。所以有些地方采取的方式就是发这种消费券，对吧？在若干时段之内你要去消费。但是我从各路朋友所得到的消息看呢，就除了很顶尖的这种奢华的那种餐馆以外，一般的餐馆现在生意其实已经慢慢恢复正常了。旅行线呢，相当多的旅行线也是恢复正常了最近有一些教授曾这个他到中国去度假嘛就是在美国当教授的几位教授都跟我讲了这个情况。也许他们去的地方可能不太一样，但是整体给我的感觉就是说，一般的中国的消费实际上已经恢复了一定程度，只是说以前不像以前那么大胆花钱，就是说比较节省能去比较便宜的地方就住便宜的地方。那我觉得这是一个正常的社会的一个正常反应因为早几年中国手里那个对这个未来的消费信心有非常之大，现在是没有那么大的消费信心，但是人们的消费的这个情况并不是熄火了所以真正要解决的就是说，中国的是一个社会保障体系问题。当社会保障体系没有建立起来，人们花钱过分的谨慎，你这个内循环就做不起来。那么你怎么建立这个保障体系，同时又要防止像西方国家这样福利有时候并不是照顾了真正想照顾的人，或者说呢过宽的照顾给穷人，或者是造成矛盾懒惰的现象。习近平也讲过这种情况。习近平第一次出国他不是到美国来，也不是到别的国家，第一次到出国是到这个北欧。
对
你记得吧？
对
他在北欧的话，北欧的福利主义，北欧的社会的这种体制社会的稳定，应该是给习近平那样一个非常贫穷的政治斗争刚刚醒悟过来的中国的一个官员来讲，应该是非常大的一个印象可能给他某一些印象我不知道，因为美国人考察西方他得出的结论是不一样的。同样的事情可能美国人感受不一样。当然现在因为习近平的简历放在这个地方，我们很容易从他的简历去理解，但是我觉得只是一方面而已，因为他也是从福建、从浙江、从上海这么走过来的，各个阶层的人他多数还是有些了解的。中国是要建立社会保障体系，所以他扶贫非常的积极，但是他也不愿意建立一个大福利社会从而去影响这种中国的这种工作的热情。我觉得习近平他的思想永远是在既要又要还要他现在都要所以呢他不是那么的，而且他的这个政策吧最大的一个特点是，还有一个政治家的特点，就是说他不求短期的反应他比较追求是长期性的规划性的事情所谓的定力也好，所谓的有战略思想也好。因为中国的经济过去几十年不是说衰退，而是说过热之后所产生的泡沫和问题，可以说积累了30年，正好在胡锦涛的后期其实是开始清理了。但是胡锦涛和温家宝当时他们还是向现实妥协了然后给了这个更多的现金，给了更多的投资那么就加重了后来习近平上台之后处理这些问题的难度。现在的这个社会吧，因为习近平在台上 他又有不愿意下台搞了10年还继续搞下去然后再加上整个的新闻媒体简直是丑陋无比粗暴无比，政治上也是很粗暴在法律上采取很多措施很粗暴那么怨气呢怨恨可以说都是集中在习近平身上。那么你习近平是中国最高领导人，老百姓也好，其他人也好，发怨恨也不能说不对，但是呢，他不是问题的全部我看一些朋友把写成今天中国的经济问题都是习近平的问题，这个就是说不是说习近平不应该承担责任，而是这个是会错误的理解今天的中国的经济问题的本质性和习近平或者是未来中国处理经济问题的一个思路。如果你都认为是习近平，那很简单，把习近平干掉嘛，对不对？如果不仅仅是习近平，恰恰习近平可能也是在解决某些问题，那未来经济的结论就不一样。所以我看一些西方媒体的一些评论，或者是有些朋友的评论，我不同意的地方就在这个地方。习近平不是说对今天的经济没有责任，但是你把今天的经济的责任主要的放在习近平身上，那不是说习近平应不应该承受责任的问题，而是说你会让你对中国的经济情况会产生一个错误的判断。
好，谢谢何明先生的点评这刚才何明先生说的几个观点我也是比较同意的，稍微补充几点。那么来自华盛顿邮报的有另外一篇文章，我觉得对于华尔街日报的这一篇文章就是一个很好的补充，其中就提到了整个故事的另外几个方面。那我们知道中国政府之前也曾经面临过出现经济衰退到底应该怎么办这样的一个问题比如说在2008年的时候，当时呢由于全球金融危机的影响，中国也出现了经济下滑迫在眉睫的时刻，而当时中国政府的应对措施是什么呢？就是大规模刺激以债务为基础的房地产和基础设施建设。的确当时是让中国的经济很快就拖出了2008年全球经济金融危机的陷阱。这呢也让当时的中共领导人多了一种自信，就是美国以及你们这种自由主义任求市场胡来这样的模式其实已经破灭了，已经不再是神话了，我们这一种国家引导的发展模式才更加行之有效。习近平自己也经常说东方崛起西方衰落美国是全球经济混乱最大论源等等等等。但是在2008年的时候看来那些成绩或许有效，但是现在可能大多数的经济学家都会达成共识，这样的一个政策正是今天经济出现深层危机的一个不可忽视的一个长期的原因。现在不管是地方政府还是房地产开发商，他们所面临的资金紧张和债务过度，其实就是过去过度投资的直接后果。如果现在重新来上演2008年的这样的一个剧本，的确可能会缓解眼前的压力，但是债务可能进一步出现螺旋式的上升，等于习近平这儿的这个皮球又踢到了下一代，而下一代再来捡过中国债务烂摊子的时候，可能情况比今天还要更加的危急。这呢是非常重要的一方面。但是来自华盛顿邮报这一篇文章也提问了另外一个问题。习近平一直强调共同富裕，共同富裕，共同富裕这个词本身就带有某一种福利主义的性质和特征。所谓的共同富裕强调的是在整个收入分配时要更加的公平和合理。但是习近平既是把共同富裕放到了整个政策议程的核心，现在在提到福利主义的时候又出现了这么大的抵触情绪，让人觉得似乎释放的信息有一点矛盾。习近平在81岁的时候就正式结束自己的第3个任期了，届时他是不是能够完成向中国人民交出的答卷，这现在也是一个需要打上问号的问题。那我们也知道，不管是共同富裕还是先富带后富，都需要一定的物质基础。如果中国经济真的是出现了严重的放缓，这恐怕对于习近平本人也是一个信誉的伤害。我们知道，中国没有选举政治，没有多党轮换执政，但是分析者也普遍认为，在中国大家对于这个执政党最大的信任是他们自己的感受现在生活怎样，感受未来前景如何，而不是我们说真正意义上白纸黑字的经济数据。现在很多中国人的确是感受不太好，企业家对于未来觉得非常的彷徨，很多知识分子觉得对于意识形态的高压非常的反感，年轻人对于未来的工作前景也觉得不那么乐观，很多城市的中产阶级也对于整个国家未来发展之路觉得多了很多不确定性，而这更增加了人们对于习近平领导下政治风向 和政治政策还有经济决策的深深的忧虑。对于外企而言，不管是国家安全法还是之前疫情的封锁造成的这一种不可预知的干扰，也让他们觉得中国这个国家我们不再读得懂了。我们此前呢，在节目中为大家介绍到外交关系委员会中国问题研究员 Zoe 刘，他说习近平并不是当前所有经济危机的制造者，但是现在所有这一些危机突然在这么多不同的问题上同时显现出来，与政治实际上是息息相关的。现在中国政府的反应不温不火，央行也说经济复苏前途曲折，中国的房地产行业仍然一蹶不振。分析说，问题就在于北京既知道情况很危险，但是又不希望继续吹高泡沫，泡沫现在渐渐开始破灭，但是到底是一种什么样的规模、什么样的速度破灭，到底会对于中国的经济产生怎样的后果，现在仍然是一个未知数。中国是不是会造成引发全球危机的系统性危机呢？人们警惕，但是市场似乎发出的信号并不与这种悲观情绪相吻合。这就要说到我们今天要为大家介绍的第3篇文章。这一篇文章来自《金融时报》，作者呢也是我们之前经常为大家介绍的 Dan Wang 所在的Gavico 这样的一家咨询机构的一位分析师。他就说现在中国的经济的确不景气，但是中国的经济距离形成危机似乎还很远。为什么这么说呢？我们应该从市场资产价格来看，因为任何的一次金融危机出现之前，银行的股价往往在危机爆发前的好几个月甚至是1年就开始出现一些信号。比如我们看到在2007年1月开始之后的1年半里，标普综合1500银行指数是下跌了66%，而同年6月雷曼就倒闭了。如果我们再看到以 MSCI 欧洲货币联盟银行指数衡量的欧洲银行，在2010年到2011年欧元危机的时候是下降了34.5%。当时呢，欧元区的外围国家的主权债券的收益率已经开始出现了飙升。但是我们看到，在过去12个月里中国的银行股实际上是上涨了2.4%。如果按美元计价，中资银行的表现实际上比美国的银行高出了12.6%。在一次新兴市场的系统性危机里如果当地银行的年内涨幅超过美国的银行2位数，到底应该怎样解释呢？在作者看来，答案其实只有2个。第一，要么这是一次前所未有的危机，咱们从来都没有见过的一次危机，要么就是根本不存在这样的一次危机。还有另外一点，相对于被视为传统避险投资的美国国债，中国的国债表现现在仍然是大幅领先的。在疫情封锁之前，中国国债和美国国债的回报率基本是一样的在同一个时间框架内是一样的。但是在疫情封锁还有美国进行扩表之后，实施了截然不同的政策选择。中国的长期国债回报率是17.1%，美国的长期国债回报率是负13.4%。不到3年的时间里，地方政府债券的表现已经比美国国债高出了30个百分点。如果真的是中国这个新兴市场会出现一次系统性的金融危机，还是刚才那句话，2种可能，要么就是这个危机是史无前例的一次危机，市场经济学家从来没有见到过这样奇怪的信号，要么就是这是一场根本不存在的危机，根本就没有大家想象的系统性的金融危机。那作者就接着说这个中国股市今年的表现仍然是非常让人失望的。政府债券走势、外汇市场变化现在呢也比较变化莫测，同时也不太好分析，因为中国政府仍然对于外汇和债券的价格有很大的控制权，因此这些价值信号本身有多大的含义，可能仍然有很大的偏差。但是如果我们看到中国以外的其他地方，大宗商品价格一路走高比如铁矿石对中国最敏感的大宗商品价格，现在已经从去年10月的低点上涨了50%。即使中国经济的负面影响不断扩大，铁矿石的价值还在上升。对于中国敞口最大的这一些西方的公司，比如法拉利爱马仕等等，股价表现特别好。而事实上， 大多数奢侈品的生产商的股价还是接近历史高位的。如果中国真的是面临系统性崩溃，真的是没有见过这样的我们叫做反常的信号，那到底是怎么回事呢？作者就分析实际上呢，现在还是存在过度的负面情绪，在中国经济本身不景气的推动下有的时候市场的负面情绪可能会把大家对于整个情况的把握推向另外一个极端。作者又举了另外一个例子，澳门赌客的数量最近已经一路飙升，回到正常水平了。中国国内的旅游业也出现了广泛的回暖。6月和7月虽然汽车的销售量从数字看有所下降，但是今年年内整个汽车的销量仍然在继续提振。我们再看到阿里刚刚公布的第2季度的财报显示，销售额也恢复了增长，因此中国经济似乎并没有出现内爆或者是巨大的系统性的摧枯拉朽式的危机这样的特征。当然了，这呢是我们就说纯从资产价格这个角度对于中国金融风险的一些分析。不能否认的是，中国经济结构性和周期性还是在放缓的。但是作者最后得出了一个结论，说现在与中国有关的资产价格的行为，或许呢可以让我们心里多一点信心。如果你不认为中国这个国家就是前所未见的，它的国家就是它的这个金融危机产生的模式就是与世界上所有的金融危机都是反着来的，那么现在我们对于系统性危机的担忧似乎是与现实严重脱节了。那么对于这样的一篇文章，何平先生我们应该怎么看？
佩服我非常佩服这个读者在这样一个声浪之中还能够如此诚实的讲出中国的经济的他的一些困惑。他的这个困惑不是说中国不存在危机，而是说在讲中国危机的时候，另外一些情况恰恰是我们在讨论问题的时候忽视的。现在绝大多数的文章是没有价值的，讨论中国经济的问题，无非不过是就业率很低但是只讲到青年就业率就没有讲到一般就业率，而且不讲一讲青年就业率为什么会这么高到底是什么原因，这个里面的复杂的程度很多，只讲到房地产的这样一个衰退或者是崩溃或者是怎么糟糕，不想到其他的产业方面的巨大的变化。中国清洁能源，中国的建筑能力，中国在其他的新兴科技方面的领先的地位或者是潜力，大家根本就视而不见也视而不见呢。整个实际上是应有的一些调整，而不是说完全爆来这个跟这个亚洲金融危机这个南美的陷阱或者是美国的次贷危机是不一样的经济的表示方式。另外就是忽视了中国的政治的经济的这个互相的这种掌控能力它并不是说由老百姓手里突然之间像美国一样的只能跑到街上去住了，对吧或者是像南美这样就完全控制在这个外资手里资金一来就来了，走就走了，对吧？也不像这个跟美元对接的刚刚对接的这个泰国一样的，对吧？你一下子被这个一个这样的一个叫什么鳄鱼是叫什么当年那个索罗斯给他一个非常恶劣的一个词很多人对他恨之入骨对于很多人讲那是一个巨大的伤害。中国现在的危机大家看到的现象都不能说不是现象，更重要的是一种怨恨更重要的是一种失望，更重要的是一种沮丧更重要的是对现在的政治的压制的一种厌恶，或者是对这个一些政治口号的一种恐慌，而忽视了中国的经济的基本的能力，也忽视了中国的现在的基本上的潜力，更忽视了中国现在的某一些产业方面的一种优势。所以在这种情况之下，我认为经济时报这篇文章它也不是说否认这个问题的严重性，而是说提出了另外一些角度。所以我非常感谢李奇博士找到这样的文章。我也希望我们的观众在看待中国问题的时候，不要跟着一起去实现那个所谓的自我实现的日拟。什么意思我不认为这个自我实现的日拟是这个国家会变成你们所想实行的日拟，而是你个人可能会变成这样一个灾难性的日拟中间实行的一部分。你真的去躺平了，别人躺平了吗？ 你真的吃怎么样了？别人会像你这样吗？中国30年，有的人已经积累了1年的财富，他可以躺平，他还可以到美国躺平，他也可以在中国躺平，他也可以跟你一起怨恨。如果你还是在拼搏中间，你还是在改变人生过程中间，我不认为中国在未来几十年之内，它完全失去了这个变革的可能性，甚至恰恰相反，中国的经济的活力在未来几十年几乎在全世界上是很难以替代的，至少在新兴的这个制裁业方面，中国的领先地位几乎无可匹敌。我们在几十年来看西方媒体对中国的报道，多数的情况之下就是唱衰，因为唱衰符合他们的心理预期，所以讲中国是血汗工厂，讲中国是廉价劳动力，讲中国是劣质品种，这些问题在中国的发展过程中可能都存在过。对这个劳工权益的不保护这个产品过分的这个廉价低廉，对吧？对西方市场的这个冲击，这些问题都存在品质也存在的问题。但是现在中国在制造业方面的品质、基金方面的品质，在很多产业方面，我们开玩笑嘛，就是中国的模仿能力、造假的都甚至比原来的产品要好。中国的整个的制造业30年的奠定的这种基础仍然会继续延续下去中国的经济根本就不像西方媒体，也不像我的那么多的朋友所描述的那么悲惨因为如果你要跟队一起去实现这个日年，你就看看过去30年这些媒体是怎么描述中国的他们没有一天真正诚实的面对中国的变化的良好的一方面，就是讲中国不好。这也可以因为有这样一种批评的声音，让中国或者是企业家做会做得更好，让中国政府现在的有一些恶劣的做会做出一些纠正是必要的。我认为批评没什么，关键是中国人自己，你们自己是不是真的愿意躺平还是愿意这个走线，还是愿意像我这样，就是愿意生活在一个自由的地方。每个人的选择都不一样但是我站在这个遥远的这个美国，我当然是希望能够中国变得更好一点所以我对中国的存在的问题有非常严厉的批评，但是我同时不是为了批评而批评，我看到了中国的潜在的力量已经在生长，而且没有因为过去的疫情会得到根本上的改变中国的整体的经济在未来会有一个非常好的一个重新起飞。
好，谢谢何明先生的点评的确呢，这个作者我觉得给我们提供了事实的另外一方面，就是到底怎么样定性中国现在遇到的问题。我觉得他有一句话说的非常准确，就是说中国实际上出现的问题是系统性、周期性和结构性的放缓。那这个放缓呢，既是因为中国进入了一个新的我们叫做发展周期，同时也是因为之前积累的问题、高速增长带来的后遗症现在渐渐在显现。可以说是系统性和周期性的问题、结构性的问题，再叠加过去疫情封锁，再叠加政策失误，基本是这样的一个性质，我觉得定性就比较准确
对，
如果把整个中国的经济问题你完全说成是一次系统性的摧枯拉朽式的金融危机，可能会造成外溢式的这样的一个对于整个世界是一场灾难。我觉得最重要的一个错误可能就是大大的高估了中国整个经济的外溢性。因为我们之前在节目中也向大家介绍到整个的中国债务其实有2个特点：第一，大部分债权人在国内；第二，大部分的债权人是中国的国内的储户；第三，就是中央政府的财政实力仍然是相当稳健的。有了这一些因素，再加上整个金融市场的不开放导致中国经济再出问题，对于整个世界的系统外溢性都是比较小的，更多的是可控的是这样的一个形式。那么至于作者所说的资产价格呢，这一点呢就要提出一些不同的看法。他提到了几种不同的资产价格，但是没有提到全部。有一些资产价格也让人感觉到现在情势不是那么的乐观，但是大致的分析思路我觉得是值得我们参考的。如果参考历史上出现的其他所有的新兴市场的危机，中国现在的资产价格都和过去那些完全是相反的。那么到底是不是中国会重蹈之前墨西哥的金融危机、东南亚的金融危机，还是更严重的金融危机，我们呢就必须进行更加谨慎的分析。谢谢各位观众朋友们对于我们的支持，感谢麦团，感谢如是我们，感谢艺人给我们节目的打赏这个何明先生还是这个我们叫做体力非凡这个上节目之前就说必须要去洗手间，到现在仍然是 这个做的十分的端庄严肃。那我们不强迫和平先生继续做下去了。今天节目就到这里，明天同一时间思想先驱报与大家不见不散。
I'd love to know how you got interested in China, and then second, how did you build a career as an analyst of China's political economy?
Sure. So, I mean, as with quite a lot of the sort of older China hands, I don't come from a academically economic or financial background. I was actually an English literature with a medieval focus. So that was my entry point into the industry. But then there not being a ton of jobs in medieval English literature, I went to work for JP Morgan coming out of college and did some pretty interesting stuff in a structuring and solutions team that I suppose I was hired into on the basis that my math ability at the time was basically GCSE level. So like 15-year-old level, I hadn't done any at A level. And so all of the kind of financial industry interviews were essentially testing mental math at that level. And so that was very familiar to me. It was really up in my mind. So yeah, I did that for a few years. Very interesting, but global financial crisis intervened. And so it became not a very pleasant place to be. And so then I came out to Beijing in 2010 to do my MBA at Tsinghua University in their international MBA program. And then read some stuff by Arthur Krober and co at Dragonomics and thought it was excellent and got in touch with them. Started off interning, doing all kinds of odd jobs, and so then progressed into writing research. And that's what I've been doing ever since.
We're here to discuss this really great client report that you put out, which was actually flagged to me as I told Arthur when I reached out to get his blessing to bother you to see if you could come on the podcast. I had done so because I had about 4 or 5 clients of Gavco Dragonomics reach out and say, you should have Thomas on to talk about this because the report was so good, which I agree. And so we're going to dive into this today because it's a really exemplary and exhaustive look at the state of Chinese corporates, their ability to raise capital, what the state of their profits are, how they're being affected by industrial policy. But because we're recording this on August 21st at a moment where there's acute anxiety and a surge of commentary on the state of China's economy after just day after day of negative news coming out, I wanted to take advantage of your time here to ask for your assessment. I was going to call this a hot take, but this is what you do for a living, so this wouldn't qualify as a hot take. But I think the big questions on everyone's mind is this the beginning of the end? China has been able to pull rabbits out of hats for decades. There's a debate about, is this the convergence of deep structural forces, or is this a cyclical forces that with a little bit of time and some policy, the right policy interventions, China's going to be able to navigate its way out of this? Is it a combination of those? So if I could just get your sense of how bad is this? How much agency does Beijing have to steer through or around this? And do you see, has the big China story just shifted inexorably, which seems to be some of the vibe I'm getting as people are processing news of the past few weeks and months?
Yeah, it's a tricky one because I think our house take in general is that we're not on the brink of an imminent financial crisis in a sort of layman model for basically reasons that are attached to the fact that the Chinese financial system is just a very different beast to the US, certainly to the US back at that period. Specifically, all of the vast majority of the banking system is controlled explicitly by the state, both through shareholdings, but also through a lot more in terms of window guidance and informal channels, and that there's been quite a lot of work done to disconnect and disentangle the shadow sections of the financial system from the big banks. And I think that in general that's been done reasonably well. And so the picture at the moment when you see news coming out like the collapse of Zhongrong Trust, these kind of shadow pseudo bank institutions which are exposed to the property sector, like the bag holders at the end of the day for those are going to be basically wealthy households who've invested in trust products and WMPs. It's not the same as it would have been back, let's say 5 or 6 years ago, where there was all of this entanglement with the formal banking system too. So you've got that going on in terms of the linkages. The second part being that basically the banks can and have been delaying recognition of losses on their balance sheet for a long while, and there is basically no catalyst that will force them to do so if the state doesn't force them to do so. So you've got basically deposits trapped, all your liabilities are these sticky household liabilities that can't really go anywhere else, and actually where they've been getting more and more and more of them because since people haven't been buying housing. And then on the other side, on the asset side, yeah, there's probably a considerable amount of non-performing loans, particularly at the moment and in the property sector, but they just don't have to recognize them fast enough for that to kind of spiral out of control in a weeks or months or probably even quarters or years timescale. So that's the good news. The bad news is that I think that you can have a systemic problem or even a systemic crisis without it being a financial crisis. So the systemic problem set that we're basically facing in China right now is that the property sector is in really dire straits, and it's very difficult to over-egg the pudding on that. You've got property sales at less than half of 2019 levels, property starts at about 40% of 2019 levels. Liquidity situation for developers is absolutely terrible, as you can see from Country Garden defaulting even now on onshore debt. So they're cutting all of anywhere that they can stop the cash bleed, they're doing it. And at some point, that's also going to translate into stalled ongoing projects and completions falling off too. And that was exactly the kind of negative feedback loop that started this property crisis back in Q3 of last year to begin with. The households saw Evergrande in particular not stalling on projects, not delivering houses that they'd paid in advance for, and then panicking. And they just stopped buying new houses, not only from Evergrande, but from other developers they're worried about as well. So as and when we get into that kind of death loop again, starting at a much lower level of sales than was even the case during that crisis, then what developer liquidity does exist just dries up even further. So there's a self-fulfilling doom loop there. So that's the property situation. And the problem is that the central government policy reaction function is so slow and insufficient at the moment because they are and have been increasingly operating in this ideological straitjacket. So back in the good days, you talked about the power of this like black cat, white cat pragmatism. And that's really been overtaken increasingly by a sort of resurgent moralistic Marxist view of the economy where you have good and bad economic actors. And that yoked to this somewhat self-deluding notion that the good government-driven tech investment can and will, in the short term, replace bad property speculation as the primary driver of growth. And so if you look at the world in those terms, then you can justify a sort of, I don't know, like Victorian or Austrian or even maybe traditional Chinese medicine analogous belief that actually economic pain and suffering are a good thing as long as they're happening to the bad guys. And that the good guys won't worry. And you actually see this explicitly coming out of the government, so that they won't worry about housing prices falling, for instance, if you're a household who's just bought your house to live in, and that none of that will affect their income or their willingness to consume, even as their like sole retirement savings vehicle sheds value. So there's all of this kind of going on that is just creating a really bad situation that is feeding back into itself, that is very much stemming from the property sector. This is not the entirety of the Chinese economy being kind of intrinsically fragile or a house of cards or weak. It's a property phenomenon, but it's a property phenomenon that is affecting everything really fast, and which the central government just doesn't really seem to have a grasp on. And I think the extremely disappointing translation of the rate cut on Monday is the most recent example of that.
I would love the irony if China, in this increasingly sort of Marxist moralistic view of markets, it was Ludwig von Mises and F.A. Hayek who was sitting on Xi Jinping's bedside night table, and so it was Austrian economics driving it. I doubt it is, but it would be an interesting irony. And just very quickly, Thomas, for the lay listener, can you just paint a very quick picture of why trouble in the real estate sector is of such singular importance to China? I mean, no country wants to see problems in your real estate sector. Of course, we saw in our own financing of real estate in 2007-8, we had some problems. But just very quickly, why is real estate so uniquely important for China, or for the economy at least?
Sure. From the household perspective, it's important because it's basically their sole savings vehicle for retirement for most people. There are some people who have decent state pensions And the provision of state healthcare has improved, certainly. But for most people, their savings are tied up very much in a house, or more than one house in many cases. Home ownership is much higher in China than it is in any other economy at a comparable stage of development, or indeed to most developed economies. And so for households, housing is more important in China than basically anywhere else. It's also more important because, China produces all of the things necessary to make these houses. So you think about US or Europe, some portion of the materials going into housing have to be local, cement specifically. But you can buy steel from other places, and most of the electronic machinery and equipment going into housing is going to be from China. So, all of your little fuse boxes and wiring and things like that. China's producing all that itself. So when property construction slows down or speeds up, as it did from about 2 million units at the start of the 2000s to maybe 11 or 12 million towards the peak, that's fantastic for the rest of the materials producing sectors. So you get a boost to construction, tens of millions of people working in the construction sector, another millions, if not tens of millions, working in material producing sectors, steel, glass, cement, copper, all of these kinds of things. So the whole vast swathes of the heavy industrial economy were built basically to serve housing, and when housing had its little downturns, to serve infrastructure projects. And so if you get some situation like this where, and there is a lag to it, so if we've got sales down 50%, starts down worse than that, real estate investment is down only about 10% from 2019. So you've got your inputs and your outputs to the construction kind of pipeline. But that pipeline, if the inputs are shrinking as much as they are, will shrink itself over time quite considerably. So far, steel production has been okay this year. We've started to see glass and cement come down a little bit. But the really bad story for those sectors will happen in the future if we continue to get conditions running as they are running. And so that's the specter that is haunting the Chinese economy at the moment, the idea that this 30% plus of economic activity will be directly affected by the housing slowdown. And then everything else gets affected because, people are employed, they have wages, the wage growth slows, they get unemployed, and you get this knock-on effect that is very large.
I mean, there's a nice tie-in because obviously the real estate sector is at the heart of the downturn now, and at the heart of your report, which this is just a teaser, but at the end, I think we'll talk about the big implication of what dwindling capital, what sort of dwindling resources going into the real estate sector means. And in some ways, it sounds like a good thing. And that's been, for a long time, there's been criticisms that China's, economic growth was over-reliant on the real estate sector. That's true. But as always, the challenge is, if not real estate, then what? But we'll get into that a bit later. So turning now to the report, you combed through 6,032 offshore listed non-financial firm annual reports.
Onshore and offshore.
Onshore and offshore. And we're trying to look at basically what the picture is for corporates since COVID. There's a lot of insight and conclusions you've come to, but I wanted to just at a very high level, and then we'll go into each of these in more detail, but ask you if you could just give your sort of thumbnail sketch of what did you find? What were the big sort of takeaways from this research?
Sure. Yeah. So the reason that we kind of wanted to look at it in these terms is basically that the way that capital flows in the economy it's not always evident from the surface, but it is something that the leaders in Beijing are really thinking about a lot on a kind of day-to-day, month-to-month basis, because they're thinking in terms of industrial policy and in terms of where should the available resource of the economy be flowing in order to generate the sort of economy and the sort of society that they want to create, both in terms of improving people's lifestyles and increasing their resilience, particularly to kind of external shocks. And so the reason that it's interesting to think in those terms is that it kind of starts to connect these disparate strands of the various kind of crises which hit China's corporate sector over the course of the pandemic. And so you have kind of four main ones, basically. You have this profit shock, which hit consumer-focused sectors very hard as a consequence of repeated COVID restrictions and lockdowns. And then within that, a kind of intentional regulatory shock to the internet platforms as a consequence of the crackdowns that really savaged Tencent, Alibaba, and Co.'s earnings and profits. You got a leverage shock, which was the crackdown on financing to real estate developers, the so-called three red lines. which then translated into an unintentional confidence spiral among home buyers, which has just completely crushed sector profits for real estate developers and at the same time crushed their access to capital. You have a broader capital raising shock that is a consequence of a number of factors, the tech crackdown, COVID policy, US and Chinese regulatory actions, and then geopolitical risks and temperature heating up that have made it far, far more difficult for Chinese firms to raise funds from foreign investors in Hong Kong and in the US. And then finally, you have this industrial policy shock, which was there has long been a intentional channeling of resources towards certain sectors, new energy, electric vehicles, and most notably semiconductors. That industrial policy push has been strongly intensified by US sanctions as kind of China doubles down on industrial policies that are supposed to accelerate the domestic production of technology hardware that they are worried about losing access to in the near term, and some of which they already have lost access to. So those four shocks together have kind of combined to create a very significant shift in the marginal annual flows of capital to different sectors of the economy.
I don't know how to ask this question in a way that will maybe be coherent enough, but I wanted to understand the role of COVID in these four shocks. Maybe ask it a counterfactual, which is imagine a world in which COVID didn't emerge from Wuhan. How much of the shock of these four shocks do you think would be with us today?
I think it would be very significantly less.
Okay.
I think most importantly, I think without COVID, you don't get the same wholesale destruction of the service sector and consumer-focused industries, which have had such a negative impact on people's employment and income expectations and livelihood. And that kind of multi-year trauma that households went through has been, I think, quite a strong input into their falling risk appetite, both for housing and for other kinds of assets. So COVID is really important on that front. I think also COVID really helped to dial up tensions with the US.
Yeah.
And in general, kind of China's, the feelings about China and the rest of the world in a way which feeds back into this toxic negative feedback loop. So yeah, I think COVID was really important. And, maybe not so much COVID, but the way that China handled it relative to other countries. And, I think very few places handled it super well. But yeah, I think it was really important.
So if we can just go maybe through the four shocks in more detail, I think we might spend a little bit longer time on the capital raising and industrial policy shocks. But just starting with the profit shocks, or the profit shock,
mm-hmm.
I wonder if you can talk about the winners and losers in terms of retained earnings. Not all sectors of the economy did as poorly as others, obviously. And again, listeners can't see the chart I'm looking on page 3,
mm-hmm.
which shows just a significant fall off in real estate, which matches the story we were just talking about earlier. But I wonder if you can unpack a little bit who was hit most and who has done relatively well in terms of retained earnings.
Sure. So yeah, real estate's done absolutely terribly. Energy and materials firms did very well in 2021 and 2022 in an inflationary environment. Consumer goods and services firms did pretty bad. You saw a very significant fall in the year-on-year change in retained earnings. And then the other kind of big winners were capital goods and tech hardware firms who were really kind of riding on the back of a big run-up in prices of electronic components globally as you got this big surge of purchases of computers and phones and things like that in the pandemic era. That translates into a worse situation environment for private firms than for SOEs.
Right.
So you have a lot of private participation in the real estate sector. They got absolutely hammered, Evergrande being private. And perceptions of the riskiness of developers really kind of widen the gap then between what kind of developers home buyers were willing to buy from. So yeah, that has had very significant impacts. But more broadly, consumer goods and services tend to be private driven.
Okay. The distinction I was going to ask is that a nature of it private versus state-owned enterprise, or is it because SOEs tend to be in certain, you mentioned energy and materials, a lot of those are dominated by SOEs, so they're more upstream versus more consumer-facing private sector companies?
Yeah, a lot of it's sectoral, and then you have within the within the real estate sector, there is a discrimination based on perceptions of implicit guarantee as well.
Right. Shock 2, deleveraging. One of the interesting things was talking about the accumulation of non-debt liabilities. I mean, this is one of the sort of peculiar things of China's real estate market, which is pre-sales, which is not something we traditionally do here. So you buy the home before it is shovels even in the ground. But I wonder if you could talk a bit about how this non-debt liability picture has changed. And then I think a second question is, how do you unwind that growth in non-debt liabilities, or can you?
Yeah, it's extremely difficult. So you have kind of two non-debt liability problems basically in the Chinese economy. One of them is real estate specific, and that tends to be focused in the private sector firms. So private sector developers, there was a boom in debt issuance, bond issuance, that I think was kind of 2016, 2017, 2018, where private firms were able to issue bonds and where their financing situation was decently good. And so you got this run up of both bank loans and bond issuance that led to rising debt to equity ratio. Then all of that basically fell off really hard from, I think it's mid 2018 or so. And essentially since then, they haven't really been able to issue bonds. And they've also been squeezed on bank financing as well. And so what you tended to find was as these firms recognized that they needed to keep growing as fast as they could, and that basically anyone small would fail or get swallowed up, they just pushed more and more into using non-debt liabilities instead, which is pre-sales, but it's also extending the terms of payment to suppliers. They just wouldn't pay them for ages and ages. So you get all of these various kinds of non-interest bearing non-debt liabilities that private firms have really been relying on. And so since 2018, the ratio of non-debt liabilities to equity has been extremely high, particularly for private developers, and just hasn't really fallen, even as the debt to equity ratio has fallen pretty decently, actually. We're back to sort of levels that you saw about a decade ago. Yeah. And that makes the sector as a whole look healthier, but it just isn't true because of all of these other forms. Outside the real estate sector is interesting because there the problem is much more of an SOE issue. And so in government policy pronouncements, one of the things that you've seen for the past 3 or 4 years, definitely 3 years, has been this emphasis on local governments and SOEs paying their suppliers, because they've been using their size and influence market power to delay payments to suppliers as well. And so you have this very large, probably in the tune of 8 to 10 trillion RMB that are just owed by SOEs to smaller firms in the economy, that represents a very significant drain on liquidity for SMEs and private sector. So those are your two kinds of non-debt liability problem that China has, and they're both extremely hard to unwind.
Coming back to the sort of high-level look at this, again, if I were looking at this chart you have on page 4, which is looking at the debt-to-equity ratio for non-financial firms by sector, and as you say, this is the one that shows basically pretty consistent, aggressive, linear growth in debt-to-equity ratio in the real estate sector until about 2018. And indeed, we saw some policies put in place by Beijing in 2020, the sort of three red lines, clearly signaling that they saw leverage in the real estate sector as problematic. I look at this chart and I'm disassociated from the current economic news, let's imagine, and I would say this is a success story, right? This is, for a long time, there's been significant criticism, including by external analysts, about leverage building in the system. And of course, it was rampant in real estate. What went wrong here, especially knowing that this was, in some sense, especially when the 3 red line policies was put into place in, I forget when that was, summer of 2020, the wrong time, basically. But nonetheless, when it was put in place, did Beijing move too early and aggressively to deleverage at precisely the wrong moment, i.e., when COVID was coming and the country was moving into full lockdown, which was going to seize up the real estate sector anyway? If you were advising, if you had a time machine and you were going back to 2018, what would have been the path to deleverage more sustainably?
Yeah, so I think there were 2 gambles basically that were made in 2020 that worked for a little while and then they didn't work really catastrophically. The first gamble was basically that, and I think the timing is not terrible. So they're looking at the world, and seeing that China at that point is actually dealing with COVID really well. The zero COVID policy worked pretty fantastically. So I was there through the whole period, and we had about a month or so, maybe 6 weeks of pretty hard lockdown at the beginning, after which life really went back basically to normal and continued that way through basically the start of 2022. And so you had a situation where the Chinese government was feeling, okay, well, we're handling COVID really well. And actually at the same time, our exports are going completely gangbusters because everyone in the rest of the world is having these terrible supply chain issues and production halts. And so people are just going to buy stuff from us indefinitely. And they really did. That export boom lasted quite a long while. And even though the growth has kind of slowed significantly and it's shrinking in nominal terms now, in volume terms, it's still way above where we were pre-pandemic, which is basically until COVID hit was really, you wouldn't have guessed, given that we were in the midst of the US tariff situation. There wasn't an expectation that exports was going to be a strong, healthy driver of growth. So you had both of those things going on. They felt like the domestic economy was fine because they'd handled COVID, no problem, and they were crowing about it from every rooftop. And at the same time, they had this big export boom. So they thought to themselves, okay, this is actually a great time to kind of push the pace on deleveraging for the property sector. The problem was, of course, that exports didn't last forever. And then you had 2022, these very big, very disruptive lockdowns that really shook economic growth and household confidence. And at that point, what had happened in basically at the end of every other property downturn that I suspect that they expected would happen again is that they really viewed household ebullience on the property front as being like a beach ball that, the hard work was pushing it underwater. But as soon as you kind of let your hand off a little bit, it would pop back out and the market would rush up again. And so they figured they were doing the difficult work. And if they needed to, they'd just do that again. And it turned out not to be true, that there was some like elastic limit or buoyancy limit to household confidence and willingness to participate that basically hit the skids at the point that property developers started getting in real bad situation and entering this project stalling downward spiral. And so I didn't think that they really expected that to happen. And so the combination of all of those things together is what kind of made these gambles really fail in a catastrophic fashion.
Let's move to shock 3, which is the shock to corporate's ability to raise capital. And I think the first is to talk about, and maybe this is where geopolitics comes into it, but this is both an onshore and an offshore problem for companies. Maybe talk about the offshore piece first. What's different now about the ability of a given Chinese firm, their ability to raise capital from offshore investors? What's changed and how significant is the change?
Sure. You've got a number of things going on, but it's basically a US-China story, and it's basically a function of regulatory tightening on both sides of the Pacific, creating an environment that fed into itself and in which investors have just proved extremely loath to put any significant money into new stocks. So the first part of this was a combination that happened at basically the same time of the Holding Foreign Companies Accountable Act passing in the US at the end of 2020. And at the same time, the Alibaba, so the Ant Group IPO getting nixed at the last minute, followed early in 2020 by some pretty large fines on Baba and stern warnings to the rest of the sector. All of that, I think, could have been contained. And actually, Internet platform prices continue rising through January, even after these kind of initial sparks. The big kind of real catalyst moment was the DD IPO, and you can sort of see things falling off really fast after that. I think there was the perception certainly amongst the DD management that this was kind of business as usual, and it's a cat and mouse game with domestic regulators, and you kind of push them as much as you can, and they push back a little bit. But at the end of the day, we're fast and we're smart, and we'll stay ahead of the bureaucrats. And that turned out to be absolutely, a real mistaking of the temperature, basically. And so Cyberspace Administration, which had been the kind of more aggressive regulatory entity up to that point, just felt extremely kind of enabled and empowered by the clear anger of the top leadership at this just complete disregard for the policy line that was being kind of pushed by Beijing. And then it was just pile-on zone. So every regulatory body in the country just felt, if we're going to stay on Xi Jinping's good side, we need to hit these guys as hard as we possibly can. And it's the talk of spiritual pollution in gaming, the the ed tech sector getting completely smashed. So that's the period. And so at the same time, you have running this complete destruction of complete destruction of certain parts of the onshore tech sector, and very, very significant trammeling of the prospects of other parts from a whole range of directions. And your best case scenario as an investor at that point looking in was that, okay, well, the growth prospects for these firms are going to be quite significantly lower than we had expected them to be. Worst case scenario is you were worried that, okay, well, there's going to be some kind of nationalization, or there's going to be, that these guys are going to go the same way as the ed tech sector, and just the complete industry destruction. That was always, those kind of apocalyptic expectations were always, I think, over-egging the pudding somewhat. The first of those two prospects always seemed to us to be the most likely, just because, large sections of the e-commerce sphere are considered to be really important by Chinese government, particularly during pandemic when people were stuck at home. But in any case, you've got that going on. And then at the same time, you have this ticking time clock of the delisting from the US angle. And so this is all kind of going on and playing out. And as a consequence, you basically get a complete hiatus in any kind of large scale listing of Chinese firms in the US. Hong Kong kind of survives a bit longer, and you still get some listings down there. But over time, particularly at the moment where you get this kind of second massive catalyst, which is the Russian invasion of Ukraine and the perceptions that China is queuing way, way too close for comfort towards support, military and otherwise, to Russia in a way which could put them into the box of just the kind of complete financial sanctioning that Russian assets suffered. So those things all together were this kind of rolling snowball, which over time just got people really, really worried about the prospects for Chinese financial assets, both in their kind of internal earnings generation possibility going forwards, but then maybe more important in the potential for, just the US government telling investors, you cannot hold these assets, either explicitly or for a lot of firms, and this is particularly true for kind of public pension firms, like teachers, those kinds of things, where there's just this very large potential reputational risk if they have significant exposure to China. Things go wrong, and then they just look like not only total idiots but traitors.
I know your data only extends into 2022, so this is a little bit prognostic. But PCAOB reached an agreement, a tentative initial agreement that forestalls the mass delisting of Chinese corporates. China has been raising I don't know if it's the Beijing has been raising not the white flag, but at least has been sending out vibes to the private sector that we're done with the unilateral punitive actions against the private sector and the tech sector in particular. How much do you think, given what you just laid out as a case for what led to or contributed to some of this challenges in fundraising, what do you think a truce or détente on the delisting and China at least trying to say, we're not coming for you anymore, private sector tech companies, does that change the trajectory of this story?
No, unfortunately not. So the data so far this year shows almost no fundraising in Hong Kong or US and public markets, and VC and PE flows, which is the other significant part of this story, have dropped to basically zero as well. So in part, that's because you have these, as of the end of March, we have these new regulations on overseas listing, which require, or any company that wants to list overseas has to go through CSRC and then also get the permission of any other relevant regulatory body, which, if you are the kind of firm which is interesting to foreign investors, you probably are somewhat consumer related, and you probably have a pretty big information dimension, let's call it, whether it's AI or sort of consumer finance, any sort of consumer thing where your profitability basically relies on knowing your customers in a way which honestly most of us would be uncomfortable with, right? So it's the kind of companies which are dealing with large amounts of data to a degree which makes them attractive, are also the companies which are treading very close, in a lot of cases, towards national security lines, which remain extremely blurry and dangerous. China's focus on national security continues to tighten. and secrecy. And at the same time that they're making these overtures of friendliness to the private sector in general, we've had these multiple stories of raids on offices in Shanghai in particular, major global and US institutions. And so essentially at this point, as of my latest temperature taking from the chambers of commerce and such, there's just not a lot of confidence. They don't really believe what they're being told. And even if they do, the domestic management of these companies believe what they're being told, they just can't sell a positive China story to the global boards.
Yeah. What's the picture for state-owned enterprises?
So SOEs never really relied on overseas funding. So they've just continued to raise capital pretty happily on domestic markets. And they have better access to bank financing too. So it hasn't been such a big problem for SOEs. This has really been a private sector issue.
Let's move to shock number 4, which is the intensification of industrial policy. You laid out, when I asked you earlier for just high-level summary of this, you mentioned some of this, but I wonder if you can go a little bit more in depth into this, which is what's changed since 2020? How focused are Beijing's efforts to steer capital, and what are the means by which this capital is finding its way into capital goods and tech hardware? Is this policy signals? Is this spontaneous action by investors who just understand where green light, yellow light, red lights are in terms of Beijing's preference? So how big is the magnitude of this shift, and by what mechanisms is this capital moving from some industries to others?
Yeah. So generally when people, and particularly sort of the more government-associated think tanks talk about Chinese industrial policy, historically it's always focused on subsidies, explicit government subsidies. And if you look at the kind of quantities on that front, you can see that capital goods and tech hardware receive somewhere north of about 2.5% of gross profit in explicit government subsidies. This is the 6,000 company sample, which is significant and pretty significant in terms of ROA and ROE, but it's small in the grand scheme of things. Compared to other sectors would be much, much less. So we're talking less than 1% for energy, infrastructure, real estate, consumer goods and services sitting kind of somewhere in the middle. So the subsidy story definitely paints the picture of a strong preference for capital goods and tech hardware that moves the needle to some degree, but which isn't necessarily, it doesn't constitute, we're talking a few hundred billion RMB rather than trillions. So it's important, but it's more important than anything as a kind of signaling mechanism and a returns boosting mechanism, which then creates a reality that private investors can respond to. The second and probably more important element in this governmental industrial preference is tax rate. So real estate industry has historically paid somewhere between 40 and 50% of gross profit in net taxes and fees. Energy and materials around 30%. Consumer goods and services somewhere around 15%, and then capital goods and tech hardware as of 2022 less than 10%. So the corporate tax rate is supposed to be about 25% for kind of general reference. So there's this very, very strong kind of preferential tax policies that are all associated with strategic emerging industries and companies getting these sweetheart deals. Semiconductor sector, just for reference, pays, I think, 0 in net terms, maybe even a little bit less than 0. And so if you put these things together, you have subsidies equivalent to, maybe 2.5% of gross profit. And then these very, very substantial tax savings. What you get at the other end is a picture of return on assets and return on invested capital, which is very favorable to the kind of sectors which Beijing wants to encourage. So then when we get to talking about the kind of rationality of capital allocation and distribution in China, and you're thinking about, how much capital are firms getting relative to their apparent relative performance, it actually looks pretty decent. The problem is that relative performance kind of landscape has been quite significantly distorted by government intervention to begin with.
You imagine, though, if I were a policymaker in Beijing and I was looking at pages 6 and 7 of this report, which for the audience is the one where you lay out the subsidy piece, but then the charts on page 7 are looking at which sectors dominate capital markets or which are doing where the movement is in the capital markets. Mm-hmm. This is exactly the story I would want if I were Xi Jinping, which is we're seeing a movement from capital raised by non-listed financial firms increasingly going to tech hardware, 25% versus 19% a year ago. And then hold on a second, I'm going to read from the second one, which I think is in 2022 alone. Tech hardware sectors dominated onshore IPOs, 43% of all funds raised in 2022. So maybe just trying to segue this industrial policy conversation to the big so whats. I guess my first so what question to you is, this is a success case for Xi Jinping, right? I think we've all intuited that his general critique of spontaneous market mechanisms as capital, aggregators and channelers is there's no assurance that they go to the quote unquote right strategic sectors that are needed to overcome productivity challenges and increasingly to fight China's way through what they see as an embargo strategy from the United States. So given what you've just demonstrated here, and also if you look at, as you mentioned, a lot of this capital is moving into firms that have, higher returns on invested capital. So what question number one is, why is this not a good thing? Or at least from Xi Jinping's perspective?
Yeah, to some degree it is. So if we look at some of the successes, or let's say the most notable success of the Chinese economy this year, the brightest spot has been electric vehicle production. So you have this very rapid replacement in domestic sales of internal combustion engine vehicles with EVs that have gone from somewhere in the 5 to 10% of car sales a couple of years ago to we're now approaching 30+%. Incredibly fast and very impressive phenomenon. And at the same time, shipping probably something like 500,000 of these vehicles a month out to export markets. That's a real, a triumph of industrial policy there. You could also make the same case for solar panels, other battery technology, right? So all of this stuff has been extremely successful. As a supply side policy, it's done really well. The problem is that you can get to a point where your level of supply has left demand so far behind that you encounter some pretty significant problems. And so they just don't really think about the economy in the kind of Keynesian terms that generally the rest of the world thinks about it, where you do need to worry about aggregate demand at the same time as you're worrying about supply. China essentially thinks about it as supply creates its own demand. Don't worry about it. Just keep pumping it into the right places and we'll all be fine. The sign that that's not working is the kind of plunge into deflationary territory that we've seen this year. And that is kind of inevitable if one of your three major sources of demand, i.e. the property sector, is in the kind of straits that it is. That will only get worse as we talked before, of the linkages into household income and consumption too. So it has worked to some degree, but it's just outpaced the demand side of the economy to a degree which just creates this big overhang of potential crisis in which it's fine you being able to produce all of the electric vehicles and advanced chips and things in the world, but you do need someone to buy them at the end of the day. And there is a danger that households are going to be unable to do that, whilst at the same time China's relationship with major trading partners has deteriorated, particularly with the United States, to a degree that, so for instance, there are apparently punitive tariffs coming on transshipped solar panel shipments from Southeast Asia and the other countries that China's been shipping panels through to avoid the Xinjiang restrictions. And so as other countries get more and more annoyed by China and smarter at figuring out these indirect routes of import, you have trouble of external demand as well. So that's the challenge. So you could say, to some degree, it's worked great as industrial policy, but that does have to fit into a broader conception of the economy that takes demand and supply into account.
The second so what, and maybe the final so what, and this is actually just a point you made in the slide deck, but I'll frame it as a question, which is to Xi Jinping's view that, well, this is working. And if we could link together now the current state of the real estate market and the likely declining share of economic activity that's going to encompass, and this movement towards hard tech capital goods. One of the points you make, which I just ask if you could re-summarize it and then draw it out a bit, which is the real estate sector was so large, and these strategic and emerging industries aren't nearly sizable enough to be able to replace the role of the real estate sector. Can you frame that more succinctly than I just did and talk about why that is such an important challenge for management of China's political economy?
Yeah. So the challenge is basically that you have this, one of the charts on here shows the 12-month rolling sum of fixed asset investment in the statistics. And you have real estate investment running at somewhere around 17.5 trillion RMB. And then you have, even after a very significant increase in investment by capital goods and tech hardware firms, it's running around 10 trillion. And so far, the decline in real estate investment has come down by 2, 3, maybe even approaching, probably 2 or 3 trillion on a rolling basis. But that's going to get significantly worse if the problem is not addressed. If we see it drop by half, which is what sales and starts are doing right now, then you have a decline in real estate investment, which is basically almost equivalent to the entirety of investment by the capital goods and tech hardware sector. So you would need that sector to double in order to make up the slack. And to some degree, you can patch some of this over with infrastructure investment. The problem with that is the local government fiscal position is so closely linked to real estate sales and land sales that we're already seeing a bit of fiscal contraction from local governments this year, even in the face of all of these problems, basically because they just don't have very much money left. And so the central government can exhort and push them to borrow more through special purpose bond issuance. But if their general financial position is so stressed and strained by the fact that there've been a lot of tax cuts offered to firms, either originally to try and get them into their local area as this kind of part of this jockeying and competition, and then more recently as part of the last two years of quite aggressive fiscal loosening by cutting tax rates on firms, that there's just not very much left in the cupboard. And so consequently, there's a risk that any liquidity which is made available by central government through these special purpose bond quotas in particular to local government will just get sucked into filling gaps. And consequently, if you have a situation where real estate is suffering that badly, it's going to be very, very difficult to sustain high rates of infrastructure investment growth without the central government taking on large amounts of new debt, which they have proven to be very loath to do. So that's the problem. It's just a simple kind of arithmetic of aggregate demand and the fact that real estate is so big that you could really struggle to fill that gap if it opens up in the way which it really looks to be doing this yet.
Final question. 3 years from now, you're doing an update on this report. What's your guess on what the top line story is going to be? It's a totally unfair question, but this feels like such an awkward moment to try to make assumptions about China because all the plates are spinning right now in ways that are confusing. And even the heuristics we normally use for the ability of policymakers to yet again swoop in and sort of sort it all out or pave it over or kick the can. Clearly, there's a lot of, there are areas where there's lots of ammunition left to do that. If the leadership showed acute awareness of how bad the problem was, especially Xi Jinping, and decided that the prioritization was economic stability. But I can't tell in the relative weighting. My sense is Xi Jinping is probably thinking, we're still going to we're going to hit the growth target, and we're gearing up for intensified geopolitical struggle with the United States. So we've got to be able to China's own version of walk and chew gum at the same time. But nonetheless, it's very confusing. Is it as confusing for you? And where do you think this will be in a few years?
Oh, it's undoubtedly a confusing subject. So like in let's say a 3-year time horizon, that takes us through 2026. So there are a number of scenarios that you could imagine. One of which is that as a consequence of that things get significantly worse this year and that property sector just continues to fall apart, and that at some point in the hopefully next couple of months, that shocks them into a kind of realization that this kind of this overly ideological mode in which they've kind of straitjacketed themselves is at risk of destroying or undermining the really important policy priorities which they legitimately and sincerely hold about making people's lives better and making China kind of secure and resilient against external pressure. And so they, even, kind of in the midst of all of some of the illusions that we built around themselves, recognize that they do need to grow at a certain pace to achieve that there needs to be sufficient employment. And so consequently, the hope would be that they realize that soon enough to put a sufficient floor under the potential risks in the property sector, which would involve probably some degree of guarantee to that developers are not going to go bust and that home buyers, don't worry, you will get the houses that you're buying, combined probably with some kind of pretty sizable fiscal stimulus. So that would be the positive version. In that scenario, what you would hope would be we get a little bit of improvement in external demand going into next year, that they manage to kind of get property sales running at around a more sustainable level, which is still much lower than 2019, but is higher by some degree than we're at today. And that the property firms, given this kind of safety margin and guarantee, are able to basically just keep things ticking over while shrinking their balance sheet. In that scenario, and I think basically in any scenario, the amount of capital and support going to capital goods firms and tech hardware firms continues to increase as a proportion of economic activity. In the kind of downside scenario, it would increase even faster, not because they're getting more resources, but because everything else is falling apart at the seams. So I think it is, if we don't see more urgent and muscular central government response to this crisis, there is a distinct possibility of growth falling to basically nothing into next year and staying there for a significant period of time, just because all of your negative feedback loops basically kick into effect. People's wages aren't growing, they just stick everything in the bank. There's not, consumption falls very significantly. That sort of scenario, the kind of doom loop. So that's the kind of the downside scenario, not only because of the potential consequences domestically for China and for people's livelihoods and for the global demand, but because that is also the sort of scenario historically that we've tended to see particularly autocratic states act in extremely aggressive ways on the international stage. And there are plenty of actors on the Chinese side, and sad to say probably on the US side as well, who are kind of shifting into a position where they quite welcome a conflict.